Now we start to finish this up, and we're coming to almost the last step of the hunter. It says place an horizontal line at body swing high low. It also says wait for a minimum of one candle and its wick that does not touch the horizontal line. Wait for price to retest the horizontal line, but never extend the first swing body. Check if wicking candle engulfs previous candle body. And the engulf can be visual double top bottom, or you use top wick plus body sell hunter and bottom wick body buy hunter. This is where it gets a little bit more advanced, and we are going to look at that. If any of the retesting candles do not engulf hunter the previous body, you allow also the next non-testing body to engulf hunter the previous body. When hunter rules are applied, place your order at the second body version number 2 and the hunter on the first swing body version number 3. We already went through that in the previous video. We're going to check it again. Your target is minimum the next major support or resistance. You may also apply the box system stop or place for maximum profits, which will come in separate videos. So back at the chart, also use dollar daily chart. Here we have our swing high, right? So we place a line at the body top, or even we can set an alert, add alert. So next time it comes up here, you get an alert. Good thing to do, simply because you probably have a lot of assets that you're trading. Then what we talked about was that we want at least one candle with this wick that is not touching this line here. Because if it's doing like these two, they are touching it out in this line together. That's the same block. You must have at least one candle which you get here, right? The wick or the body does not touch this line. And then you want the market to come up, back up, test this line, minimum, or go above it, but it can never ever close its body above this body's high. That is super important. It's where most fail with a hunter. And when that happens, when a retest happens like this, you see how this is a bullish candle. It's open here, closes here, a high price that gets higher. This is not where you want to enter, because you want to have a confirmation candle or confirm on a lower time frame. This may be a lower time frame because this is daily, but it may also be the ABC situation, maybe ABC 61.8 situation. So when the first test is a bullish candle, you allow the next first candle that is not touching the line to be the one that should engulfing the one that did touch the line. That was the complex text in that we were reading. This one. If any of the retesting candles do not engulf hunter the previous body, you allow also the first next non-testing. Non-testing is when it's not touching the line to engulf hunter the previous body. And as you can see, it touched, didn't have an engulf, touched, engulfed. And this engulf was also one of the testing candles. So let's say this was bullish, right? It would be the same type of candle. This is not the second candle in this setup. The second candle that happens is the first non-touching candle. So in this case, this red one would give you an entry, unless you were waiting for version number 2, version number 3, and in this case, it didn't work out. It never come back up retesting it. That happens. But it's important to understand these candle setups, how we do a swing high here, just a high here, how as long as it's touching the line, it's actually the same first or the second retest, but it's the first candle that's doing it. But when it comes a candle below, then you can use that one as well as confirming potential continuation of current trend. But you can't use the third one, that is the second non-touching candle. And when you have all this, you set your version number two, which is the body high of the second retest. That's your first entry. And then version number 3 is the body of the first swing high. Version number 2, version number 3. And if you're trading version number 1, you will enter immediately when this one has closed. Putting your stop above the highest, do I have to tell you? Wick, which is this one. Stop above here. Pretty good money management if you ask me. This is your protecting shield. If it goes above here, it's not a good trade anyway because it's going to go up. But if it's not touching the longest wick, won't go up. What did it do? Didn't go up. And your stop loss was never an issue. And your target is always the next major support resistance. So when you're here, what is the next major support resistance? Is it here? Is it there? Is it there? Here. Right? It should be a clear support from this level. But I mean, if you're happy with this level, say, oh, this is a huge consolidation, I'm going to leave here, then take that. Build up your account. Learn better strategies to take the price down, right? In this case, in this trade, you would do fine here, you would do fine here, you would even do fine here. But that's not always this good setups, right? Sometimes it may just go to this level. And that's why we talk about apply the stop, replace, and box system, which you will learn in separate videos.